Hi, this is Cayden from VIA Value Investing Academy. Give me a second, let me just shut off the video right from the YouTube. Okay, good. Now, just to double check, that is just to show that my PC is working, right? And you can hear the sound. Okay, so let's get started. By the way, just to double check, right, I can see about 105 people who are watching this YouTube live. Now, good day, huh? Evening already, Alvin. Now, if you are able to see my slides and hear me, right, can you just type what lah so that I can know that you are there watching? Yeah, if you don't mind, you just type what lah. Usually there's a bit of slow response, right, when I say and then it pops up from the YouTube. Yeah, so I just want to double check that all of you can hear and see. Okay. Voila, okay, good. So Angeline, right, represent every single one who are watching this video. So now it's working, right? Okay, the rest are coming in. You got Git, Hui, you got Edmund. Okay, so Voila, Situ. Okay, good, great. So I think everything is fine, right? Okay, good. So let's get started. Now, welcome to the third episode of our deep dive series organized by VIA and of course all the team members who are here, Reina, Susie, Irfan, as well as Shermaine, who is sitting in the room. Now, so today is quite interesting, right? Today we're going to talk about transportation. If you look at the slide over here, you should be able to see two categories of transportation. One is on the air, right? And then specifically, we're going to talk about Singapore Airlines, a very well-known brand. You know, if you're Singaporean or residing in Singapore, you should know about this airline. Then the other one, we're going to talk about transportation on land, specifically Tesla versus NIO. If I remember, I think last month we talked about Tesla, right? And today we're going to talk about the so-called competitor or the Chinese version, right, of Tesla called the NIO. Yeah, so SIA and then followed by Tesla versus NIO. So this episode, we're going to talk about these three companies. But before we go into the detail, right, I need a small help from you. Now, in case some of you missed our previous episode and so on, you can watch the recorded version, right, on our YouTube channel, which is youtube.com/Value Investing Academy. So if you look at the screen over here, there is a QR code, right? QR code. Depending on whether you're watching this via your phone or your laptop, if you're watching this via laptop and then you have your phone with you, right? Is it okay? You can just scan, just scan and then subscribe. So you can. You look at the site, you realize that we have a very small amount of subscriber, right, which is 2.81K. So that's 2,800. Yeah. So our goal, right, is to move from 2,800 to 2.8 million subscribers. Yep. So that's our dream. So it'll probably take another 100 years, but we will get there one day. You know, recently our Prime Minister said, you know, we will get there someday. So I carry that same spirit. Now, so again, the QR code is here. Just need help to scan and then subscribe to our YouTube channel so that we get there someday. Okay, good. Now, and of course, after you click the subscribe, which also means that in the future, if we upload any interesting videos, relevant videos, you will be notified. Yeah. So ready? Have you? Okay, good. So in case you're wondering how come I'm turning my head, right? Because today I've got a new gadget, which is this clamp, and then I'm putting the phone over here, so it looks a bit professional. Previously, I was leaving my phone on the table. So right now it looks quite pro. Scan ready? Okay. Good, right? Voila! We have about 130 people watching this. So before I start, as usual, right, I'm just going to read out the disclaimer. Please pardon me. So then meanwhile, while I'm reading a disclaimer, you can make yourself a cup of coffee, and then I'll see you back. Okay. So anyway, let me just read the disclaimer, right? Now, just to let you know that the purpose of our deep dive series is solely to illustrate, right, the application of value investing methodology and various valuation methods, in the context of real-life companies. So we are not academic, we're talking about real-life companies. Of course, the intention is for continued learning of value, investing method, as well as investor education. So remember, right, under no circumstances does any of the information provided during this evening, right, represent any form of suggestion or recommendation to buy, sell, or hold any stocks. Because the illustration in all this case study is simply to demonstrate the application of value investing principles. And of course, There's so many of you, right? It does not take into account the individual characteristic, the profile, or the risk appetite of any given investor. So remember, right, in no event shall VIA, Value Investing Academy, or me and Raina be liable for any viewers, guests, third party for any damages of any kind arising out of the use of any information that's shared here, right, including without limitation, the use of such content outside its intended purpose of investor education, and of course, and any investment losses, lost profit, lost opportunity, special, incidental, indirect, consequential, or punitive damages arising from such unintended use. So remember, our company, My Kinesis Investment Private Limited or Value Investing Academy, nor the authors, right, of this evening series, right, operated by or affiliated with any broker, dealer, or licensed financial advisor. So remember, right, past performance is a poor indicator of future performance. Again, the information on this presentation is not intended to be, nor does it constitute investment advice or recommendation. So remember, right, last one, neither VIA nor myself or Raina makes any representation or warranty as to the completeness or accuracy of the information in the case study represented in this evening. Okay, good. Now, so let's talk about the first segment, right, which is this company called SIA or Singapore Airlines. Everybody would know. But the reason why I chose this company instead of all the companies, right, is because on a particular day, which is on this 11th of October, right, the share price of SIA actually shot up by almost 9%. Now, 9% is usually a bit of big deal because a typical price movement on a daily basis is about 2 to 3%. So 9% is really quite a lot on a typical day. And that took place, right, because our Prime Minister Lee announced that Singapore, of course, is expanding its VTL or vaccinated travel lanes to 11 countries in total. I think as of today, this number should be changing. By that point in time, when our PMD announced, the share price shot up. So when the share price shot up, what does it mean? Now, whenever you see any share price of a stock shot up, that means investors or whoever actually jump in to buy the stock. Yeah. So when people jump in to buy the stocks, the share price shoot up. And if people jump in to sell the stocks, the share price goes down. So in this case, the share price has shot up. And of course, not only retail investors, right? SIA at that point in time also attracted the highest institutional buying. Institutional buying, that means there's fund managers, not retail investors like us, of all SG listed stocks with 25 million of net inflow. So in other words, 25 million goes in to the stock market to buy a stock, which resulted in the spike of the share price, which is why we want to talk about, why is this spike, and even with the current VTL or future VTL, right, does it really matters to the investor? Now, so let me share with you what are the things that we're going to talk about, specifically a very short history about how SIA got started, and of course, as an airline, how do they make money specifically? And of course, how SIA attempt to really, how should I say, turn around during this pandemic. And the most interesting thing is, since people jump in to buy SIA during this pandemic, how is SIA performing even before the pandemic? And of course, this is a very interesting part. SIA has not been doing well, but is their management being paid well, even though the company is not doing well? And of course, we're going to talk about the most recent update, and the conclusion will be just my personal thoughts. So these are the things that I'm going to talk about. So let's talk about how SIA got started. Now, if you look at this picture, right, it's a very old school picture, and you see this tail, right? There is this 3 alphabets which stands for MSA, right? So what is really MSA? So we travel back in time to 1966. Actually, the government of Singapore and Malaysia, which are very close neighbor, they decided to take majority control of an airline, which is the Malayan Airlines Limited, and of course, change its name to Malaysia Singapore Airlines. So if you pay close attention to this part, can you see there's a Malaysia Singapore Airline? Quite interesting, MSA, right? Malaysia Singapore Airline. And of course, in 1972, right, eventually this MSA, was split into 2 portions, which is the Malaysian Airlines system, which is the current Malaysian National Airline, as well as the Singapore Airline. Of course, 2 countries somehow didn't have a common interest, so they decided to split. And of course, if they decide to split, Malaysian Airlines has to go on its own path, as well as SIA has to go into its own path. So of course, SIA eventually, right, moved to the new Changi Airport way back into 1981. So interesting. Now, people know about SIA, but maybe not many people know that it was once a a hybrid, right, between the Singapore government and the Malaysian government. So that's a very quick history. And if we, before we even talk about investing in SIA, right, we better know what SIA is all about, how it makes money. Now, if you look at this diagram, right, you can see that SIA, predominantly the revenue sources come from 4 segments. So the first one is, everybody is familiar, called SIA. But not many people may be aware, right? SIA makes money predominantly not only from the passenger activities, you also make money from the cargo air transportation. That means it not only transport humans, right, but it transport goods. So that is under SIA. Now, then most of you would know this company called Silk Air. But Silk Air, right, does not transport cargo. Okay, so they only focus on transporting passengers, and that includes Scoot. But of course, you will know that Scoot is more for the budget segment. So the difference between SIA and this Silk Air and Scoot, right, is Silk Air and Scoot focus predominantly on passengers, and for SIA, Singapore Airlines, right, you focus both on passenger as well as cargo. And interestingly, if you look at the extreme right, you will see this is SIAEC. So what does this stand for, right? SIAEC stands for SIA Engineering Company. So from the name itself, an engineering company. So these are the things that it does, you know, airframe maintenance, overhaul services, and this whole chunk. In other words, all the engineering services. So in other words, this is broadly, right, the services that are provided by SIA, not just passenger service alone. So these are the 4 segments. And if we look at the detail in terms of the numbers, right, so which one takes up the larger segment? Now, so before we talk about the larger segment, some interesting thing, right, is just to let you know that SIA, right, is 56% owned by Temasek Holdings. And of course, you know, a couple of months ago, the CEO, right, of Temasek Holdings is this wonderful lady, Ms. Ho Ching. I think everybody would know, and she's the wife of our current Prime Minister Lee. And of course, you have read the newspaper, you will know that she has left, right, as the CEO of Temasek Holdings. So when she left, you know, some people, right, those gossipers, right, they posted on Facebook, after she left as a CEO of Temasek Holdings, right, she maybe had more time to post things on the Facebook, right. But interestingly, she left one room from the Temasek Holdings, right, and then she went into another room. So she went into the room of a Temasek Trust. So right now she is the chairman of Temasek Trust. So she didn't really leave. She has always been around. Now back to how SIA make money. Remember just now we talked about the flow chart from the Singapore Airlines, the Scoot, and the Silk Air, as well as the engineering services, right? So in terms of the pie chart, you can see that the largest reported segment, that is way back in 2019 and 2020, right? You can see it's based on the passenger flow. That means the passenger services. So it takes up about 80%. And the cargo and mail takes up about 12%. And the small little things, right, like engineering services and all other things are very small. This one takes up maybe about 7%. So in other words, if you are an investor, if you look at this pie chart, right, there are a few ways of looking at it. The first way is all their eggs are into one basket, and their basket, right, is passenger services, which means that if there's nothing happening in the world, right, they will continue to squeeze money out of providing services to the passenger. But if something happens to this, then this huge 80.5% will be severely affected. So that's way back before the pandemic. So of course, we already know that the pandemic is here, but let's do a paraphrase, right, of what they do. Remember, passenger as well as cargo and mail, of course, they are engineering services. And the interesting thing is this, right, can you see? You know, under this 2+%, right, they also provide tour activities, sales of merchandise, maybe toys, you know, merchandise, as well as rental income, right, from the lease of aircraft. So all these are not so important. The key thing is still the passenger services, followed by the cargo and mail. Now, if you look at the 10 years revenue from this, right, which is 14 billion to about 15 billion, and if you look at all the numbers at the bottom, right, so what does it mean? If you look at the lines over here, it looks a bit flat, right? It doesn't go like, you know, straight up and so on. So the point I wanted to make for this histogram is just to let you know that the revenue for the past 10 years, even before the pandemic, is stable, is growing very slowly. And how slow, right? We're talking about 9.9% revenue growth over 7 years. Now, imagine if you're working in a company and then 7 years later, right, your salary only grew by 9.9%. So that's really low. And here we are just talking about their revenue growth, right, before the pandemic. We are not talking about after or during the pandemic. Huh? And of course, if you look at the last bar, right, which is 2021, because of the pandemic, this whole revenue actually plunges. Huge amount. And we are talking about negative 76.1% decline. So all along, they're not growing, and then right now they're affected by the pandemic. Yeah. So of course, because of the pandemic, the passenger flow revenue shrink. So you can see here, right? Yeah, it used to be the 80%, and right now it's shrink to 17%. And of course, right now they have to rely on this cargo and mail. So even though they rely on the cargo and mail, overall, the company as a whole is really doing very badly, as you can see over in the revenue, right? So I think the increase in the cargo and mail is just to mitigate some of the, how should I say, the negative effect by the pandemic, but it's still not enough to drive back the revenue back to the pre-pandemic level. Now, but there are some good news. There's just some silver lining. Silver lining. If you look at here, right, you can see in 2020, the revenue actually plunged to this new low, and then subsequently, slowly is coming back. Now, it hasn't fully come back yet, but it's just slowly coming back, right? And then again, most of their money comes from passenger flow. And if you look at these three brands, right, with Singapore Airlines, Silk Air, and Scoot, you can see Singapore Airlines has more destination, followed by Scoot, followed by Silk Air. So this is just some little details, right, of which airline, right, within this SIA group, right, has the most number of passenger destination. So this is just for info, right? And of course, just now we talked about, you know, the passenger flow revenue shrink, and then they are focusing on the cargo. If you have read the newspaper maybe a couple of months ago, you will see like SIA releasing some photos where, you know, some of the airline, right, some of their planes are being retrofit from the left side, which caters to passenger to cargo. I mean, they don't really have much choice. They need to squeeze as much as they can. So even though the cargo flow revenue has increased by 39%, it helped to mitigate cushion, but it's still not so good enough. Yeah, still not good enough. Huh? And of course, if you look at the last parallel, right, on the right side, you can see just the plunge in the passenger traffic resulted in an operating loss of $2.5 billion for the year 2020. In short, in 2020, they are losing money. So you can see here, right? It points to the left, that means it's losing money. It points to the right, that means they are making money. So this is positive, and this is negative. In short, they are losing money. So imagine if you are the CEO, you know, running this SIA, the pandemic came, you're bleeding, right? You know, every day you keep on bleeding, there's outflow of cash, outflow of blood. So of course, ultimately you want to slow down the flow, or you want to stop the outflow of the blood or the cash. So now the question is, what has SIA done to slow down this you know, bleeding, right? So how SIA attempts to survive this pandemic? Now, so the key thing is when there is an outflow of cash, what you want to do is you want to reverse. Instead of cash going out, you want the cash to come in. Yeah. So SIA did quite a number of things to raise cash, yeah, so that some cash comes in. Now the first thing, right, is in 2020, SIA did this rights issue, right, which helped them to raise $8.8 billion of cash. Now, in case you're not an investor, you hear this thing, rights issue. It sounds quite complex. Yeah, so let's go into the nitty-gritty, right, so that you learn some terms about, you know, world investing. What do you mean by rights issue? You see, the word rights issue comes from the paraphrase, something like, oh, I have the right to do this, I have the right to do that. So what do you mean by rights issue? If you look at the next paragraph, it simply means that this type of issue, right, gives the existing shareholder, let's say a shareholder, right, the rights to purchase more new SIA shares at a discount to the whatever market price, right, at the stated future date. So this right issue is quite similar to puts option, right, where it gives you the right to buy a certain shares at a certain price in the future date. Yeah, so it's very similar to put option. So this is called the rights issue. But anyway, strategy number one, rights issue, they raised $8.8 billion cash, and that goes inside the pocket. So that's one thing they've done. And the second thing, right, or rather, some other thing they've done is they also further raise more cash, which is $6.6 billion of cash through secured financing. Financing is just a big word for borrowing. A bond issuance, I'll talk more about this bond. What are bonds? What do you mean by bond issuance later on? But financing is simply borrowing. And of course, they sell the aircraft and then eventually they rent back. Yeah, so such ways is to raise more cash. So first way, rights issue. Second way is to do all the secure financing, bond issuance, and so on. And of course, other than raising more cash, they also need to do some cost-cutting measure. And with that, of course, they deferred more than $4 billion of capital expenditure, right, through agreement with aircraft manufacturers. So you see, as far as the management is concerned, they wanted to do a lot of things. But despite that, right, you see, they didn't turn a negative to a positive. So what they do is they are just slowing down the bleeding. So you can see they reduce the cash burn rate for SIA to $100 to $150 million per month. I mean, I'm a small business owner, so I hear this, I can imagine, right, every single month I'm burning like 100 million to 150 million. Oh, so I mean, for a small business owner, I think that's really a huge amount. Yeah, so they're trying to cut down the bleeding. Yeah, and then not only that, the SIA also do other interesting thing, right? And I'm going to spend more time on this. And SIA did a bond issue, right, called a mandatory convertible bond, or MCB. Now you look at these three terms. You can divide these three words, right, into two parts. One is this MCB, right? Number one is a bond. Okay. The second part is this MCB, right? It is mandatory convertible. I mean, it's a bond, and yet this bond is supposed to be mandatory converting into something else. So what does this mean, right? Now in June 2021, remember they need more cash while cutting loss, cutting the expenses. They need more cash, right? So in June 2021, so SIA raised a further more money, yeah, through the rights 2021 MCB, or mandatory convertible bond issuance. Now, so what I'm going to do is I need to explain what are bonds first, in case you are new to this. Now, so for example, if let's say I'm SIA, right, and I needed money, there are a couple of things I can do. Just now we spoke about the list of things like borrowing, sale of aircraft, and then lease back. And one thing they've done, right, is this thing called the issuance of bonds. Yeah, but this bond is not an ordinary bond. Now, but let's talk about a typical bond. So let's say I'm a company, I needed money. So when I say issue bonds, right, a issue bond is just a bigger word of selling bonds, So of course, if I sell something, or maybe if let's say I sell this cup, right? So if I sell this cup to you, you give me money. Yeah. So instead of this cup, I'm selling this thing called a bond, or I'm issuing this bond to you. So when I'm issuing this bond to you or selling this bond to you, I'm collecting money upfront. But the interesting thing about bond, right, is usually bond has a maturity period. So in other words, when I sell this bond to you or issue this bond to you, right, there is a time frame. So let's say that the time frame is 10 years. 10 years. So what does it mean, right? It simply means that once I issue this bond to you, and if the maturity period is 10 years, usually or generally at the end of 10 years, I'll return the capital sum back to you. Yeah. And then in between, right, because you are giving me money, right, upfront for me to use, I better give you some benefit. And this benefit is always in a form of interest rate, or sometimes they use a bigger term called a coupon rate. So next time you hear coupon rate, it simply means interest rate. So remember, you give me money, I give you this bond, at the end of maturity period, I return the money back to you, and then in between, right, I'll give you some form of return, yeah, called a coupon rate, or all the interest rate. So that is how a typical bond is being structured. And this SIA's MCB is slightly a bit different. Now, what I mean by different, right? The first thing is usually bonds give interest, right? Okay, every year I give you 1%, 2%, 3%. But this MCB gives nothing. Yeah, that means there's no interest. So which means that you give me the money, I pass the bond to you, and in between I give you nothing. So now the question is, if I give you nothing, I mean, why should you give the money to me, right? It doesn't make sense when you don't have return. And then your money is stuck with me for a great number of years. Now, So what happened is, remember the two words, mandatory convertible. Mandatory convertible, right? It simply means that at the end of the maturity period, instead of returning whatever cash that I collected from you previously, instead of returning you cash, I'm going to return stocks. Stocks. One more time, right? Instead of giving you cash, I'm going to give you stocks. So am I right to say that if I give you stocks, you know, I still have that cash and so on? So that really helps me SIA, right? Because there's cash flow, right? But the question is, how is it being converted, right? Okay, so I'm going to give you some detail. Now, for example, if let's say today you have $1,000 worth of this MCB, and you hang on there, you hold on until the maturity period of 8th of June. Yeah. So remember, right, they didn't return you back in cash, they return you back in SIA shares. So how is it being like calculated? How do you know how many shares? So what happened is, for example, if you have $1,000 worth of MCB, right? Yeah, during the maturity period, right, your 1,000 will become 1,698. But again, right, instead of giving you 1,698 of cash, so what SIA will do, right, is they will take 1,698 divided by 4.84. This 4.84 is a fixed amount. Yeah, whether you like it or not, it's a fixed amount, right? Which means that if I take this divided by this, right, let's say, in the future, you will, your whatever bonds, MCB, right, will become 350 SIA shares. Okay, so one more time, $1,000, you pass it to me. At the end of the maturity period, right, I give you 350 SIA shares. Yeah, so remember, they are not cash, they are shares, right? So what does it mean, right? It simply means that if the share price in the future of SIA shares goes down until very, very low, that's how much your bonds is worth. Of course, on the other hand, right, if the share price of SIA shares go up to very, very high, then you're very lucky. So in other words, you may not know how much you're going to have in the future, because how much you have is going to depend on what is the share price of SIA shares during the maturity period. Okay, so now the question is, of course, which investor will be the right frame of mind to do this, right? It's like you're just gambling. Yeah, in future you have no idea whether it go up or go down. You know, you really do not know. So SIA is aware of this, I suppose. So to sweeten the deal, right, they make a promise, or rather something attractive to the investor. So they go something like this. They say, you know, in between from now until the maturity period, we can choose to buy these MCBs from you in cash. Now remember, the keyword is they can choose. So in other words, they can choose to buy or they can choose not to buy. It's not a promise, you know. Now, but if they buy, right, so what does it mean? It simply means that if today you buy $100 worth of MCB, right, and then on the 24th of December 2022, you receive $106.121 back. So in other words, it's about 4% per annum, 4%. And of course, the longer it is, right, you realize that the returns becomes higher, which is 5%. But remember, the trick is this. The trick is there is no guarantee that they'll buy back. Yeah. So the worst case scenario, right, is number one, you hold on to the bond in between SIA choose not to buy back. So in other words, your return is going to be unpredictable. And then during the maturity period, right, the share price actually plunge. Yep. So remember, this is the deal. So what I'm going to do is to keep it more interactive. Maybe I'm going to ask the audience, right, who are watching this. There are about 216. Yeah. So maybe let me ask the audience over here, right. Now, if I'm SIA, I'm going to offer you this deal, right, which is called the mandatory convertible bond. Now, I'm going to give you 5 seconds. Would you buy this MCB? Maybe you just type yes or no. Remember that there's no right or wrong answer. Later, I'll tell you what happened after they issued this MCB. Somebody bought it, seriously. And that somebody bought a lot of it. Okay, so maybe I just wait for a couple of seconds, right? You just type yes. You know, yes means you will buy, or why, or you type no, you're not going to buy. Yeah, so I'm just going to watch this. There are about 218 people, right? Yeah. Okay, Audrey say no, Bernard say no, Zhang say no, there's a Roger, buy Kaya, Roger say buy Kaya, Kelvin say confirm no, oh, so there's a lot of no, right? Now, how can you say no? Remember, I already told you there's one fella, right, or party actually bought a lot. Okay, ready? Yeah, now just to let you know that SIA, you know, it's not the first time that they play this game of mandatory convertible bond. Yeah, so what happened was I think this should be the second time. The last time when this MCB was issued, right? Now give a guess. The take-up rate is so low, Temasek, right, ended up buying 96% of the MCBs issued. Yeah, this is the last time. But how about this second time? Okay, ready? Remember the last time Temasek bought 96%, right? Now, this is the news that I saw on the 18th of June. Can you see? Singapore Airlines, 6.2 billion MCB rights undersubscribed. I mean, you already say no, right? Or can you say may consider, which is okay, right? I respect that, right? And at the bottom article, it says Temasek Holdings will again, there's a tonality, it will sound quite sad, right? Temasek Holdings will again take up the lion's share of Singapore Airlines MCB, with the second tranche being undersubscribed. So when I read this news, I have this feeling that when SIA do this, probably they already know that retail investors are not going to do it. So maybe they already have a coffee session, right? Temasek Holding, you know, nobody subscribe, maybe unsubscribe. So this is just my guess, the side gossip talk, right? But okay, so of course, fair enough, Temasek Holding owns 56%, or SIA, I think is, they don't want to see anything bad happen to SIA. So now let's talk about SIA, right, even before the pandemic. So since people are buying the stocks right now, assuming that VTL is going to create a miracle, right, or elixir, yeah, so that eventually SIA will be resurrected. But let's talk about the numbers even before the pandemic. Now, if you look at this graph over here, it talks about earnings per share. Earnings per share simply means that if you buy one share of the company, how much profit, right, is the company generating. Yeah, so in this case, if it's 0.197, it simply means that if you buy one share of the company is producing an earnings or a profit of 0.197. So if you look at this trend, based on value investing philosophy, we want the trend to be uptrend. So here, if I could draw a line that cuts across this, I think it appears to be quite good until 2018. Yeah, 2018, right? But remember, 2019, right, was a year that, you know, pandemic wasn't even heard of. So can you see from here onwards, it goes right down, right? So it's really a question mark whether if the pandemic is going to be over, will the EPS recover? Yeah, and if it is recovered, right, unlikely it's going to grow. Yeah, unlikely it's going to grow, right? So that is the earnings per share part. But let's talk about the cash flow. Now, the cash flow looks quite nice. You can see over here 1.7 billion, this is a 2.7, so it's growing steadily, not fantastic, right? Steadily, and then when the pandemic struck, you can see this bar point outwards, that means negative. Negative, that means there's an outflow of cash. Right? Inflow, pop, and then there's a outflow of cash. Now, having said that, if you look at the next graph, right, which is this free cash flow, you can see that this free cash flow here, all these numbers, right, are all negative. Yeah, so what does free cash flow means? Now, free cash flow, right, is simply equals to the cash flow that the company makes, right, or gather, right, from the day-to-day operation, right, minus away capital expenditure. Capital expenditure typically are assets that they buy that will last more than 1 year, for example, airplane and so on. So in other words, cash flow is good, but the moment they start purchasing something, right, it becomes negative. And negative is one thing, you realize that the negative becomes more and more negative. Yeah, so it's usually not a good sign. We want this to be positive and we want it to be an uptrend. Yeah. And not only that, not only the cash flow from a free cash flow is negative, right? If you look at the debt has been increasing. Yeah, at this point is about 0.9, right? So what does 0.9 means? 0.9 means about 90%. Yeah, 90% means for every $100 of a shareholder's money, right? The company borrows $90. Yeah, so if I could paraphrase this, imagine your pocket only have $100 of cash, but you borrow $90 out of this $100 of cash. That's usually quite a lot. As much as it can, we want it to be less than 50% or less than 0.5. Yeah. So at this point of time, right, the company is not doing well even before the pandemic. Yeah. So if SIA is not doing very well even before the pandemic, right? Let's look at how the CEO, right, or the management is being paid, even though the company is so before the pandemic. Huh? So let's look at the remuneration of their management. Now, if you look at 2020, right, you can see there is a salary cut of the senior management. So maybe let me just flash all this, right? Now, the chairman of SIA is Mr. Peter Seah, and then the CEO, right, is Mr. Goh Chun Pong, which is shown over here. So let me just release all the text. Now, in short, if you look at here, right, during the before the pandemic, can you see there's his salary total remuneration is about 4.2 million, and then he took a pay cut, and right now it's 2.7 million, even though the company is losing money. So this is really debatable whether is the pay cut enough and so on. There'll never be a right answer. So I guess this is up to the investor to sort it through. Even though the company is losing money, the CEO, does he deserve this 2.7 million? So there's no right or wrong. I let you decide as an investor, right? What does it mean? Also, on a side note, in case sometimes you think that our minister is highly paid, they make 1 million and so on. But if you look at in the corporate world, right, I think the CEOs make even more money. Yeah, even more money, huh? So let's talk about the recent update. Yesterday, I was doing some Googling. I realized that the SIA only released the first quarter result. Yeah, so let me just flash all, right? Now, so there are 4 bullet points, but let's focus on the last bullet. So in short, things are getting better. Yeah, not the best. Things are getting better. Now, the company is still losing money, not as bad. Yeah, so the net loss, right, is 409 million for the quarter. Yeah, but of course, previously was 714 million. So that's worse. So they are still bleeding, but at least the blood flow, has slowed down. Yeah. So that is the latest result that I can extract right, from the SIA website. And despite the fact that they have slowed down their bleeding, while they're bleeding, but there's still a lot of threats. So for example, right, the fuel price. Yeah, fuel price is one big threat. And SIA do compete with other airlines. Yeah, airlines. I fly very often, and I do not have this specific taste, right, for SIA. So in other words, when I fly, in my mind, not necessarily SIA, because I can choose Japan Airlines, ANA, Thai Airways, and so on. Yeah, so I'm not so particular with SIA. Yeah, but phone is a different thing. Some people are faithful to Apple, some people are faithful to Samsung. So airline, I don't think so. So I'm not very sure, do they have economic mode? And of course, the VTL, right, it all depends on two sides. It all takes two hands to clap. Singapore need to work in another country, and both hands say, okay, no quarantine, and then, the plane can fly. Yeah, so highly reliant on this VTL, which has to be agreed between two countries. And of course, whether eventually the pandemic, how long it's going to recover is hard to say. Right? And then, of course, the most destructive strain, right, is the Delta variant. And who knows, in future, what kind of variant. So these are the possibility in terms of the threat. Now, so let me share with you the conclusion. The conclusion, this is my conclusion, this is my take, right? So as an investor, right, we need to look at both the pros and cons, the good things and the bad things. And ultimately, as an investor, our role, right, is investment rule number 1, never lose money. That means our objective is not to always look at the bright side. We always need to look at the dark side first. Yeah, because we don't want to lose money. Okay, so let's look at the pros, the good side. The good side is cash flow from operation is good. Yeah, the next one is people like me, right? Anytime when there's a VTL, I want to jump onto it. Yeah, so we are ready to pay even at a premium price. The next one is I'm not very sure SIA girl really matters in terms of the pro or SIA women. Yeah, whichever, right? And Temasek Holdings back SIA. They own at 56%. So I think the good news is at least as Temasek Holding unlikely, right, will allow SIA to go bankrupt because it's a national airline. So these are the good sign. Now the bad sign, right, which is to take care of the downside, is the EPS growth is really not that good. Which includes the revenue growth, even during before the pandemic. Yeah. The second thing is there's a negative free cash flow. Yeah. So in other words, even if you have stable cash flow, but if you minus away the capital expenditure, it becomes negative. So this is a bad sign. And then the debt is increasing. And then they play this game of this MCV. Yeah, and this is just my take, right? Don't get angry with me. So the key thing is I don't think it's a fantastic company even before the pandemic. Yeah. So yeah, of course, the outlook is still uncertain. Yeah, uncertain, right? Now, so in case you're watching this video and then in case you want to watch a replay and then you find that there's too much, oh yeah, the Supreme Master say there's a lambda variant, right? And you find there's so much, half an hour video, you don't want to go through this video, right? Just to let you know, there is a good news for you. The good news is we have a blog site, which is at this website called www.valueinvesting.com. Just put a /blog. And then you can see all the articles over here. So in case you don't want to spend time watching the video, you can click on article and then you can share the article. And then of course, we also have the article about Tesla versus NIO. Yep. So this is the article form, right? Instead of watching the video form. So let's come to the conclusion. This is my take. Don't feel angry with me, right? It is, you know, SIA to me is a company, it's a stock, it's an instrument for us to do well, right? We shouldn't fall in love with an instrument. So in my opinion, aligns with a lame joke. And the lame joke says, goes something like this. If you want to become a millionaire, become a billionaire and buy an airline. Yeah, so I think I'll stick to buying the air ticket, right, instead of the airline stock. Yeah.
Good evening, everybody. My name is Rena, and today I'm here to talk about two rivals in the EV space, Tesla and NIO. So let me begin with a very brief introduction. Tesla is an established EV manufacturer with a strong branding and a very charismatic CEO, as we all know. NIO, on the other hand, is a 6-year young company taking the Chinese EV market by storm, and it also has plans for global expansion. In fact, it has recently started selling cars in Norway as well. NIO is Tesla's primary rival in China's premium luxury EV market. Now, Tesla enjoys the attention accorded to Elon Musk by his loyal army, and Musk is always in the news for some reason or the other, and sometimes it is not always good. For example, the regulators had accused Musk of a securities fraud, and the company settled the lawsuit by the SEC without admitting guilt by paying $40 million. On the other hand, NIO's CEO, which is William Li, he has a relatively low profile. Now, Tesla has also taken advantage of selling its green regulatory credits to turn profitable, whereas NIO is still a loss-making company. So, China is a very important market for EV companies, and EV demand is expected to grow multi-fold with the government push for zero-emission vehicles in China. So, and also the EV share in the Chinese auto market is up to 10% from 6.4% last year. And Tesla operates in China as well, while NIO hasn't encroached upon the international markets in a very meaningful manner, having just begun selling cars in Norway recently. So this makes Tesla a front runner globally. Tesla also has a gigafactory in Shanghai. However, Tesla recently faced some flack from Chinese regulators, and NIO stands to gain the most from this tiff. If Tesla is pushed out of China, NIO's growth prospects seem strong since China is a huge EV market, as I mentioned before, and it is expected to grow multifold with the government push for zero-emission vehicles. Now let's compare these two models, NIO's ES8 and Tesla's Model X. So the ES8 range varies from 355 to 580 kilometers, and while the Model X has a range of 547 to 580 kilometers. The Model X can sprint from 0 to 100 kilometers per hour in 2.8 seconds, while the ES8 can do it in just around 4.9 seconds. The Model X is surely faster, but it also comes at a premium of approximately $20,000. And the ES8 is a cheaper model in price as compared to Model X, with a starting price of $65,000 versus $100,000 for a basic Model X of Tesla. Users can control several features in the Model X through a 17-inch touchscreen which is inside the car, and Tesla also sends wireless software updates to its vehicles for new features and performance upgrades, just like we have upgrades on our app stores and on the iPhone or the Android. And the ES8 has a 10.4-inch touchscreen and heads-up display and also a voice-activated system which is called NOMI, which can control features like music and navigation. And according to Clean Technica, the ES8 heavily outsells by approximately 30% more units. It outsells Model X in China, and in the first half of 2021, there were approximately 2,451 NIO ES8 sales, which beat the approximately 1,800 units for the Model X. And since mid-2018, NIO has completed more than 22,000 ES8 sales versus 17,900 for Tesla, which makes a difference of 5,000 units. Now let us compare Tesla's autopilot with NIO's pilot. So Tesla's autopilot is a driver assistance system that can handle acceleration, braking and steering under some circumstances with driver supervision. It also uses cameras, radar and ultrasonic sensors to support two major features: traffic-aware cruise control and auto steer. And in addition to this, Tesla has been offering what it calls full self-driving features that include auto park and auto lane change. Now coming to NIO's NIO Pilot, it is the company's level 2 semi-autonomous system that offers advanced driver assistance system features, and several over-the-air updates throughout 2018 and 19 have enhanced NIO Pilot with features such as these, like lane keeping, adaptive cruise control, etc. And next we move on to autonomous ride hailing. So according to ARK Investment, the substantial earnings opportunity for EV platforms is in the provision of autonomous ride-hailing service rather than in the manufacturing or making of the vehicles. And according to estimates, the cost of ride-hailing would be significantly reduced when autonomous driving replaces human drivers, because we won't need drivers anymore. And since labor is more expensive in US than in China, the difference would be more apparent in US. So the profit margins would be higher in the US, which Tesla would be expected to capture meaningfully. And so, maybe this is why Tesla commands such a high valuation, because maybe it will get into this field in the coming future years. Then let's talk about charging. So first, beginning with NIO. NIO has a superior battery swapping technology, which is NIO's 3-minute solution to faster charging. And as on September of this year, NIO has performed over 4 million battery swaps, and it has guided also that there will be 700 stations by 2021 and 4,000 by the end of 2025. So it has taken the battery swap route, and it is growing here significantly. Now, battery as a service, which NIO uses, is a key selling point which allows customers to own the car and not the batteries, as well as have access to upgraded batteries. So you're not stuck with one battery once you purchase the car. And this may allow NIO to sell more cars while still earning a steady income from selling battery as a service subscriptions. And now coming to Tesla. So initially Tesla did contemplate battery swapping, but then it stuck with charging. So now it has a supercharging network which has grown to around 2,500 plus supercharging stations with 25,000 plus superchargers. And it has invested heavily in charging infrastructure as it has in cars. And initially, Tesla offered free charging, but as the popularity of the cars grew, they have started monetizing it. When it comes to charging time, the Tesla supercharger, which is exclusively for Tesla owners, takes about 15 minutes to charge for around 200 miles, or which is 321 kilometers. So this is significantly higher than NIO's charging time, where you just have to drive into the the battery replacement station and just get your battery replaced. Next, we have the deliveries. So in September of this year, NIO delivered around 10,628 vehicles globally, which was an all-time high monthly record for NIO, representing a growth of approximately 125% year on year. And NIO also delivered 24,000 plus vehicles in the third quarter of this year, representing an increase of almost 100% on a year-on-year basis. Whereas Tesla reported total deliveries of 241,391 vehicles in Q3 of this year, which is an increase of 73%. So compared to NIO, the growth in deliveries was lower for Tesla. Now, talking about revenues, for Tesla, the total revenue grew by 57% on a year-on-year basis in the third quarter, and it grew by 98% year-on-year in the second quarter of this year, of 2021. Whereas for NIO, the revenue growth in the second quarter was 127% year-on-year. So right now, the revenue growth for NIO is higher as compared to Tesla. And going forward, analysts also expect a higher growth from NIO than Tesla, because Tesla is a much larger company and NIO is still relatively young and growing. Now let's talk about the performance. So Tesla has reported a net income of $1,142 million in the second quarter of this year, which is up 998% on a year-on-year basis. Whereas NIO is still a loss-making company, and but its sales have been rising consistently, and as we demonstrated earlier, the revenue has been growing at a faster rate than that of Tesla. So it is a glimmer of hope for investors. Coming to margins, here also Tesla has given better margins than NIO. So the gross margin of Tesla for Q2 was 24%. And it rose to 26% in Q3. So on this chart, you can see that the red line represents the gross margin, and the yellow and the green lines represent the operating margin and the net margins. So all of these margins are rising, and whereas if we compare it to NIO, so for NIO, the gross margin has fallen slightly from 19.48% in Q1 to 18% in Q2. And the other two margins, that is the operating and the net margin, are negative because it is still a loss-making company. And when we compare the EPS of Tesla has been growing steadily, as we can see here, that it has grown constantly in the last 3 quarters. Whereas for NIO, because it is still a loss-making company, it has negative EPS. However, the losses are reducing, so I think it will become comparable to Tesla in this field in the coming years. Now, talking about free cash flow. So for Tesla, free cash flow, we can see from this chart that in 2018 it was negative, and it has turned positive in the next 2 years, in 2019 and 2020. So it has grown significantly. And in fact, this year in 2021, the free cash flow grew 111% in Q1 and by 115% in Q2. And then for NIO, NIO has reported negative cash flows in 2018 and 2019, as we can see from this chart here. But it has just started showing positive free cash flow in 2020. So since it is a younger company as compared to Tesla, this doesn't seem very surprising. Now we talk about the debt for the two companies. So for Tesla, the debt equity ratio for the second quarter of this year was 0.45, and for Q3 is 0.37. And from this chart, we can see that the debt equity ratio has been on the decline since 2018. And this is probably because the company has switched to other alternatives to raise cash, such as equity and or maybe even its own earnings. And we have talked about more details about this in our previous video and the article as well, so you can refer to that for more details. Meanwhile, NIO, the debt equity ratio for Q1 was 0.57, as we can see here in this chart, which has increased to 0.65 in Q2 of this year. So NIO has a relatively high debt, and given that it is still a loss-making company, a high debt level makes investing in this stock a little more riskier. Now, talking about the valuation, we all know that Tesla has reached the $1 trillion club now. So first, let's talk about the price to sales ratio, which is 27 times for Tesla, whereas for NIO it is 14 times. And this makes Tesla's multiple almost 86% higher than NIO's. And the enterprise value of Tesla is $1.1 trillion, while that of NIO is $60 billion. And so this makes Tesla 18 times more valuable to investors as compared to NIO. Now, we all know about the $1 trillion valuation for Tesla, and it has joined the ranks of, Apple, Microsoft, Amazon, and Alphabet. And this was thanks to a deal which took place recently of roughly $4 billion, in which Tesla will sell 100,000 vehicles to a company called Hertz, which is a car rental company. And NIO, comparatively, NIO stands at a market cap of $64 billion approximately. And while the opinion about Tesla is hugely divided, compared to Tesla, NIO still seems to be a bargain for value investors given its high growth trends. But this is not an investment advice, and please do your own research carefully before buying any stock. And so with that, I would like to conclude by these following points. So in the US and globally, Tesla is still dominating, but it is under pressure in China with NIO performing so well. The question investors have is that which company has better growth prospects, and both companies have sky-high valuations and fierce competition from local players and traditional companies in their respective markets. However, considering that NIO is still a young and upcoming company and the hyper-growth Chinese markets that it primarily operates in, there is a higher upside chance in NIO as compared to Tesla. And on the flip side, Tesla's global head start and improving profitability and margins and also a superior brand make it a safer bet. So I will leave it up to you to make your decision. And with that, I pass it on to Cayden for his remarks.
Hi, welcome back. Yeah, there is this cute little audio, right? It's called Blue Waffles with a dog profile photo. And I don't know whether it's a he or she. It's quite cute. He said, Jack Ma went missing again. And Jack Ma is always here. So, okay, I'm going to share screen. Remember just now our dear Reina was saying that there's this car rental company called Hertz, which has ordered, I don't know whether it's ordered present tense or past tense, for 100,000 EVs, send Tesla's value to 1 trillion. Now, let me just give you some nitty-gritty things, right? And when people talk about size of the company, they don't talk about the number of employees or revenue. So usually they refer to a term, right, called market capitalization. So let me just write a short form, right? Market capitalization, okay, market or market cap. So this market capitalization, right, is equals to the number of outstanding shares. I'll just write number of shares, multiply by the current share price. Share price, right? Yep. So what happened is when this Hertz released news that they are going to order 100,000, right? Remember the share price went up, yeah, where the number of shares stays the same. So since the market cap is equal to the number of outstanding shares multiplied by the share price, which means that if the share price shoot up really very high, the market cap become very huge. And this market cap crossed this 1 trillion. And, you know, in the investment world, people use the market cap as a size. Oh, so right now, this Tesla is right now a big company, like what Reina said, in the ranks of Apple, Microsoft, and so on. So remember, the share price go up, market cap goes up, then suddenly this company becomes a really huge, of course, as compared to NIO, which is a very small company. So if you look at the announcement over here, right, you can see this is 25th of October. Yeah, 25th of October, right? So this news came up, and you see here, right, 25th of October, the share price was about 1,000. And then as of just a couple of minutes ago, right now the share price is 1,002. That means from 1,000 to 1,002, so the share price has gone up by 20%. 20% in just a couple of days. Here is 25th, and here is 2nd, maybe about a week. Yeah, so 20% in a week is woohoo. And for those, of course, people, right, who buy Tesla, they huat, huh? Now, but an hour ago, right? 7 p.m. Eastern Time, 2nd November 2021, Elon Musk says that Hertz hasn't actually ordered a 100,000 Teslas yet. So if you go and search this, right, around this Hertz and Tesla, you realize that actually no agreement was signed. So in other words, Hertz announced, no agreement was signed, and then the share price shot up. Yep. So from the announcement of Hertz, right, until the actual agreement is being signed, until the actual delivery of this 100,000 Tesla, right, is going to take a while. So in other words, what investors has done, right, is investors has already started counting the eggs even before they are hatched. Yeah, so that is a typical response. I think people naturally, those people who really like Tesla, they really like Tesla, yeah, which is okay. So for those people who bought it in a much earlier time, right, they really would have made a lot of money out of Tesla. So this is the latest news. Right? Remember, the orders has not been signed. Anything could happen. Yeah, anything will happen, huh? Now, so in case you want to go to the detail, because just now Reina talks about the comparison between Tesla and NIO, right? If you're really a Tesla hardcore fan, you really want to know what Tesla is all about. Now, you can visit our YouTube channel again. Can you see here? youtube.com/Value Investing Academy. Can you see this part over here? Not only we talk about Tesla, right, per se, we also talk about the entire electric vehicle industry, which is very interesting because there's a whole supply chain. You know, electric vehicles requires the battery. The battery has certain components such as lithium and cobalt and so on. So it's really interesting. So if you really want to be like the inverted commas, right, the go-to person, the guru, right, of electric vehicle industry or Tesla, you can watch this. So we do it as much as I can in a very factual way. And of course, if you don't want to know about electric vehicle industry, you just want to zoom into Tesla alone, there's another vehicle, not vehicle, what am I saying? There's another video over here. Yeah, video here, right? So what you need to do is you can just visit youtube.com/Value Investing Academy, or you can use your phone to scan this QR code. Yeah, and then you will be notified if there is any video. Yeah, so I can see here Alvin, right? Alvin say bye. And then published 1 minute ago, Elon Musk says Tesla has not signed deal with Hertz. Yeah, so this is it's quite tricky, right? Yeah, so maybe side gossip while you're trying to like subscribe to our channel. So imagine if I'm Hertz, right, or I'm the management and so on, and then what I can choose to do, I'm not very sure is it illegal or whatsoever, right? What I can choose to do is I can buy a lot of call options on Tesla. Huge amount of call option on Tesla, maybe which will expire just 1-2 months down the road. And then after I bought the Tesla's call option, I can release this news. And then once I release this news, the share price shot up by 20%, right? Now, usually when a share price shot up by 20%, the call options, right, may spike up by 100%, depending on the strike price that you choose, whether is it in the money or out of the money. So if I'm really, I really wanted money so bad, right, and it's legal for me to do this, I can simply buy the call option, release the news, and then after that, right now, right, right now, later on when the stock market open, or maybe yesterday, I would have sold off the call options. I would have made a lot of money. Yeah. Or another way, right, is I can sell my call options, and then I buy the put options. And then after that, Elon Musk clarified that, no, we haven't signed the deal yet. Then the share price dropped, and then I'll make money out of the put option as well. Yeah, so, you know, in the investment world, sometimes we have to understand what people are doing, why are they releasing certain news. Sometimes it seems like a bit manipulative, right? So you have to be very careful. So from investors, Yeah, like the Lunar Fire Sale, Gamma Squeeze, right? Yeah. But this is not as ridiculous as GameStop. 20% is still not that bad, right? But if it's 200%, 2,000%, oh, it's really like a super GameStop. Yeah. So if you want to know more about investing in a very rational, scientific way, and then you're passionate about Tesla, whichever company, you can scan and then just subscribe to our channel. Yeah. So let's talk about the valuation. I'll just end in 5-10 minutes. Now, Jen say, manipulation. Interesting, huh? In the investment world. Investment world, a lot of funny things. Okay, but anyway, if I have time, I can tell you other stories. But let's come back to here, right? Now, this is other people's opinion. Yeah, other people. In the early days, I like to share my opinion about valuation. Yeah, then I realized that in the social media world, right, wow, some people are quite nasty, huh? So right now, instead of using my opinion, right, I'm going to use other people's opinion. Now, so this is Morningstar's opinion, right? Morningstar. Yeah, you want to hate, please hate Morningstar. So yeah, not me, right? Yeah. So what did Morningstar say? Oh, Morningstar says, right, oh, the intrinsic value is about 680. Right now it's 1,001 as far as this afternoon is concerned. The Tesla is overvalued at 64% premium. Okay, so if you're hateful, right, please look for Morningstar. So that's one. That is their valuation. Another one is I went to Guru Focus. Now, Guru Focus has this diagram, right? You see, GF is like Guru Focus value. In short, it's their valuation, it's the intrinsic value. So this is a Tesla's, right, price, right? And this red zone, right, that means overvalue. This green zone, right, that means undervalue. So as of this afternoon, yeah, their Guru Focus, Guru Focus intrinsic value is really low, highly conservative as compared to this, right? And then here is 1,000. Of course, based on Morningstar and based on Guru Focus, right, is overvalued. But of course, you may think otherwise, which is fine, right? Which is fine, right? I respect your view. You may use technical analysis or whatever. You may use certain method, right, where you can buy high, sell higher. Okay, so that is Morningstar's Guru Focus opinion about Tesla, which are overvalued. So let's look at NIO, right? Yep. And I remember Reina was talking about the revenue growth is faster, but of course, unfortunately, they are not profitable as compared to Tesla yet. So let's look at their valuation. If you're interested in both. Now, Morningstar, right, said that the intrinsic value is about 38, the share price is about 39, so it's about fair value. Yeah, fair value, huh? And then there's Morningstar, and then the Guru Focus, right, they talk about it's overvalued, right? You see, this is the red zone, right? But of course, Tesla is here. Yeah, so if you want to put this company, in terms of valuation, compare side by side, it appears that the NIO, right, is definitely cheaper or more undervalued as compared to Tesla. Yeah, but remember, right, when we compare companies to companies, we must make sure that the fundamentals are okay. But unfortunately, Tesla is doing better than NIO, even though NIO's but NIO really reminded me of Tesla in the early days when they are losing money, except they're losing lesser and lesser money. And once their EPS, right, or their net profit cross the zero line, who knows, they might become another Tesla. Yeah. So if you're really interested, you can pay attention to this. Yeah. So based on Guru Focus, their intrinsic value is 20. The current share price is 40. So Guru Focus says it's overvalued, but the Morningstar is fair value. So this is our opinion. You can always subscribe to Morningstar Guru Focus to get more information, right? So I'm just going to end with this last slide over here. So from the last slide, you can see there's this hashtag, right? So we have this special, funny, very hot, very Singlish hashtag, which is a VIA, what me please. So if you go Facebook or whatever, you can type hashtag this, right? You can search all our posts. And of course, we strongly believe that as a learning organization, as an educational company, we want you to grow with us, which is grow via, okay, VIA. Yeah, and which closely align to our tagline, right, which you can see over here. And ultimately, I think an organization exists, right, because of the support of their customer. And our customer are actually our graduates. So I can see about 209 people watching this video. And I would just like to end with a small tagline, which is our mission. And at Value Investing Academy or at VIA, we truly care to make you a better investor. So before I end off, right, now there are about 200 people watching this. Now, in case any one of you you're interested in any companies, preferably the Singapore companies and US company, if there is any companies that you want us to do the work for you, do the research for you like Tesla and NIO, right? Can you just comment on the YouTube, right? Yeah, if you're interested in any company, Singapore or US, yeah, outside this we are not so familiar. And of course, if you are interested in any industry, right, we have already spoken about the electric vehicle industry. If there are any other industry you find very exciting, but you're not in this investment line, you want some people to do the work for you, please feel free to comment on the chat. Yeah, correct. So once we see this, we'll discuss among ourselves, and then we'll select which are the things that we want to talk about as much as we can, if it sounds exciting, right? And thank you all. I wish all of you a good evening, and hopefully our stabilization phase will end very soon. Okay, so see you. Goodbye.